Hey everybody, this is Jose. We are about to get started. As always, let's have a quick chat on the chat, a quick message on the chat box where you say hello, and that means that you heard me say that. So I know sound is good and we are ready to get started. Please do that when you have a moment, so we begin on time. Thank you so much. And again, we just have a few seconds to go. Thank you so much, Joe. This is nice, wonderful, perfect. That's it. Top of the hour. Time to get started, everybody. Welcome to the session, everyone. Today is July 28, 2022. My name is Jose Blasco. This is Options Trading Live. And what we do is that we get into the markets, look at the options, look at opportunities, look at trades that we had from before, and talk about, everything from new opportunities to trade management and everything in between. Before we get started, we always like to display our financial disclaimer, and please read it carefully. This is important information. As I always say, it's fairly short, so I'm counting on you to read it completely because it is indeed important. Thank you so much. So the disclaimer has been highlighted. Hopefully you had the chance to read it. And again, from an agenda point of view, we look at the market, review trades that we may have, and then look for new opportunities. Okay, so that's the plan, and let's begin. Cool. Questions page, as we begin the session, can be accessed utilizing tradewithufos.com/Jose. While this is not officially called the questions page, we often call it the questions page because if you scroll down all the way to the bottom, you find the section where you can search for answers by typing questions. Or if you don't find the answers, you can just click on the green button and then type your question. So we will provide you with answers. The way to do this really is to not to be shy, to not to be stingy, and when you type your questions, to make sure that you are very giving with fantastic, lengthy explanations of what is it that you're trying to accomplish or you have questions about. Ideally, you upload pictures of your charts and things of that sort, so we can give you a very powerful answer. Often, we had cases of very brief questions, a bit shy, if you wish, and then we may even misunderstand what the question was about, or we may read it from a different angle. Okay, so make sure that you are detailed when you do that. In any case, this is now top. These are our beautiful charts with the S&P 500 index. And this is when we begin now our session, our market analysis and so on. Jeff, Mark, it's good to see you guys. It's good to see everyone. And if you're watching this recorded, of course, it's also good to have you. Anyway, so let's begin. I'll start with the VIX. Okay, so what's happening with the VIX? The VIX is going down. Okay, keeps going down. So we are talking about VIX at a level of 22%. Obviously, just by looking at the screen, you would say that's low. It's not necessarily that low when you look at the historical values of the VIX, but certainly it's not high at this moment in time. Okay, so being a buyer of options would be my favorite choice because if we buy options that are very cheap, you find a stock with cheap options. So again, buying cheap options is always a good thing. But on top of that, if the VIX is low and therefore the VIX goes back higher, that increases the chances that those options will gain value. And of course, if the stock goes against you, then of course you're going to be in a bad position. But even if the stock goes against you, it's a good thing to have your options gain value if you bought them cheap. And if on top of that, the stock did go your way, so now you're making money on the direction and on the increase of the options prices, because when you bought the options, they were cheap, and thanks to the VIX rising, they gain even more value that, let's say would be normal. So the plan today, whatever we do, will be to be a buyer of options, okay? And by the way, I'm just noticing that on the screen, we still have that tip concerning futures contracts, which is not applicable to our session. So let me turn that off. So we have a bit more real estate on the screen so you can see what you need to see. Anyway, so moving now to the SPY so we can start doing our analysis. So what is it that we have? Well, starting today, we have an up climate, which is confirmed. Okay. And the implied volatility of the calls, which is the blue line, it's above the implied volatility of the puts, which is the gray line, meaning that When looking at options data, we identify buyers in the market, and we're looking at technicals. We identify the market to be in a condition, in a climate status or stage, where statistics suggest that we have a greater chance of success by positioning ourselves to be long. So it's looking good. Now, there is a little bit of note of caution here, not a problem necessarily, but a little bit of a note of caution, which is the fact that max distance is 0.77 and we already reached 0.99, and that has a lot to do with yesterday move that was too far too fast. So there are risks for this initial push on the market to not to be sustainable, and we may see a change of climate before the market goes back higher, and then hopefully goes back higher with less of an intensity, and therefore we are not in a position of surpassing the 2 standard deviation value for my max distance. So always a little bit of a concern. Now, having said that, this is happening on candle 1 of the climate. So if that's going to happen, it's the best time for it to happen. Okay, if this happens a bit later in the climate, definitely now you're reaching exhaustion. But since this is the very beginning of the climate, I'm just gonna take it as good and not be concerned by it, because again, actually, it kind of in a way reinforces the fact that the climate may continue. A market move typically would progress in waves, where you have impulsive waves versus corrective waves. So of course, a move of that sort is indeed impulsive. That's good. Again, the only problem is that because it's too far too fast, again, it may not sustain. Okay, so that's the only problem. But so I'm okay. Again, having every single aspect of a trade lining up perfectly, it's very difficult. We certainly need to be demanding as traders, but also being flexible when using a little bit of common sense. I guess makes sense. So in this case, we got the climate in our favor, and the count is good, 1 out of 6. We got buyers in the market with the implied volatility of the calls above the implied volatility of the puts. That's good. And then the max distance is not ideal, but it's not like it's crazy, and it's happening on candle 1. So when you put it all together, certainly I am going to be a happy, buyer. Just like what I mentioned last week, where for a moment we had a climate. Sorry for the drawing using the wrong candle right there. Here we go. We had a climate, okay, using this candle here that was confirmed, and that was also happening while the implied volatility of the calls was above the implied volatility of the puts, even though for a little bit there we got the gray line go above the blue, and this I would say, again, I don't know for sure, but I would say it's probably given the fact that yesterday we got the FOMC meeting, and there was, probably some conservative approach and some hedging going on that implied the puts, surpassing the calls. Also, as we are reaching 1, 2, 3, 4, 5, which is kind of like almost the statistical end of the climate. So this is not like it's that strange. But the good news is that we are back into a normal climate, confirmed to the upside, with buyers on board. So again, if you combine the two analyses that we have done, which is the S&P and the VIX, where the VIX is low and the S&P is in a bullish mode with an up climate, which is confirmed. So the conclusion is that my preferred trades for today will be to identify long opportunities where we could become buyers. When I mean buyers, I mean long deltas, and profit from potential moves to the upside on stocks that we may find in certain sectors and industries and so on. Okay, so my approach today will be to be directional and long through using option strategies that make me a buyer of options. Okay, so we are talking about bull call spreads and things of that sort, and just ride the moves. Okay, that's the plan. Of course, my assumption is always that, let's say you have no trades in your account or something like that, and therefore any trade I find is good to be taken. Of course, make sure that you modulate whatever is it that I'm going to find in the markets today with whatever is it that you already have in your accounts, which all of you are different. If you are going to be trading live, any of the things that we do here, which of course that's your choice, and let's say you have already, I don't know, I'm going to be exaggerated here, you got already 20 positions to be long, and I find 2 more trades to be long, well, probably not a good idea to add them, because your portfolio is long, is too long, right? So You would want probably to have a little bit of a hedge when it comes to your deltas and things of that sort. Okay, so keep all of this in mind. A quick reminder for some of you that already know those rules, and certainly an important message for the ones of you that may be new to the sessions or watching this recorded. Okay, Ahmed, good to see you, my friend. Very nice to see you here. Very good. So let's continue. We got trades to be reviewed. This is the second part of our session when we review trades. To be honest, we only have one. Okay, and we may not have too much to talk about this one trade. So this is a trade with Twitter. So let me load Twitter first, so we get to see what's happening to that stock, and most importantly, when are the earnings happening, which already happened. Okay, they happened on the 22nd. Okay, so earnings report. Twitter reported earnings, and basically nothing happened. Stays in the same place. Okay, which is disappointing, right? At the same time, it's kind of expected because so much has happened with Twitter already. Look at the huge drop. Look at the gap up here. Look at, oh my God, so many things. Another gap down here, crazy. So again, Twitter, Mr. Elon Musk, etc., really distorted this earnings report. We talked about it in the prior sessions, how we have not been able to work on this trade, massage this trade in a way that has been efficient, because we didn't really enjoy an increase of implied volatility into earnings, since the increase of volatility happened in prior expiration dates, and it was not that massive either. Again, especially given everything that's been happening with the deal between Elon Musk and Twitter, it really has distorted the normal pattern of increase of implied volatility into earnings. Okay, so when we look at the implied volatility, okay, and we see earnings happen on that date, I mean, volatility was dropping already since like 2 weeks before or something like that. That's quite rare. Typically, implied volatility rallies into earnings and drops during earnings or after earnings. It may start dropping 1, 2, 3 days before earnings, but certainly not 2 weeks before. So such a weird trade, which always makes me very happy when something out of the normal expectation happens and we happen to be together, because we can talk about it. And if anything like that happens to you while you are doing the trades by yourself, at home, in your office, or wherever you trade, but you basically you are like, is that normal? Well, again, when we find these weird situations and we are together, so hopefully this helps to understand the lack of normality when things are not happening as expected. Okay, cool. So again, this position with Twitter ends tomorrow. So when looking at the risk graph, we will see here that we are extremely likely going to end up with a maximum risk for the trade as a result, which is losing $86 per contract, which again, it's not the end of the world. We started with much more risk than that. We end up losing 86. Okay, so great management. Just disappointing trade because of what happened with the earnings report not bringing volatility higher. But again, not a big deal. Now, if something crazy was to happen today or tomorrow, and next thing you know, Twitter goes up or down, so we could make $14. Okay, there is still potential to end up in the green, but we will need such a humongous move to happen between today and tomorrow, which again is very, very unlikely. So I'm not going to spend more time on this trade. It's probably going to end up with $86 per contract of loss, and the trade will be over, and then we'll focus on something else, and that's it. Okay, and that's part of trading. We were playing a rise in implied volatility that did not happen, and therefore the trade did not end up providing some decent profitability. Okay, cool. Okay, so bad news is that we only had one trade to review. The good news is that now this brings us to 11:13 a.m. in New York, which means that we got 45 minutes in front of us to look for trades. Okay, and again, the plan today is to be directional long, so I'm going to start doing that. I'm going to take a sip of water before I do. If you have any question or comment, please type it on the chat box, and if you don't, still type OK or anything like that makes me understand that you are with me and you're ready. Okay, thank you guys. Okay, so let me go ahead and get the matrix. Let me float the matrix. So we have it here using larger amount of space on the screen, so we can do a bit more of filtering. Okay, and again, what is it that we're looking for? We're looking for top positive CIV spread. So again, I want to be bullish, right? So I'm looking at buyers in the options arena, and I want to combine this with stocks that have been rotating up in the last 5 days. Again, if we look at the groups, okay, and we look at long term and short term, and we sort these based on strength. So we can see that telecommunications got strength on the long term, but on the mid-term is going down. And if I sort again, so we can see that we have some strength coming in industrials. That's looking good because on the long term, you can see it's going up. So it may become blue sometime in the future. Losing a little bit of steam on the consumer services, gaining a little bit of steam on consumer goods, and same effect happening on the long term. With the healthcare, on the long term, we had a rotation, and on the short term is blue. So healthcare is looking powerful. It's probably the most powerful of all the sectors at this moment in time. Again, financial losing a little bit of steam, technology losing a little of steam. So again, that's what's happening. So again, I would like to look for sectors that are rotating in the last 5 days. I may catch sectors such as utilities. So it's rotating in the last 5 days, and on the long term, it's going up. So sectors of that sort, I am welcoming. And if I don't find anything else, so then I'll also be happy to look maybe at strength on the midterm. But so far, just to get a little bit of momentum as well, if a stock has rotated, not the stock, but the group that stock belonged to has been rotating in the last 5 days, that rotation going from weaker to stronger, that rotation is not like it's going to be magic, but certainly it does have an implication, such as there is some momentum in there. And therefore, if that translates into the movement of the stocks that are part of the group, certainly that's a powerful thing to do. So I would like to scan for such type of stocks, okay, with the rotation in the last 5 days. That's the same thing I did last week, by the way, okay? And then in the scan list, I'm going to import my here we go, penny increment options, and scan again. Now my list is going to be fairly shorter. Okay, we actually only got 3. Okay, and from here, I mean, I got more conditions. Okay, nothing with the strength. Earnings excluded the next 30 days, and then with auto climate, I would want climates which are confirmed to be sensible. I mean, if I go very extreme here, I would want the weekly to be confirmed and to be early, and also I would want to be near the 9 EMA on the daily. But if I click scan, probably I got nothing like that because it's very demanding, especially when you are in a bull market like we had for years, really. This kind of setting is perfect. But since the beginning of 2022, the equity index markets have been dropping, and therefore many stocks have been dropping. So it's going to be tough to find weekly climates that are up. Okay, it's going to be tough. So therefore, looking for daily climates that are sensible makes sense. Ideally near to the 9 EMA, but of course we have less cases like that. So when I uncheck that, that's when I uncover my 3 cases. So I could certainly work on other approaches to try to find more opportunities, but as you have seen me do many things before, and I guess it's a good practice, I rather start from pickier or pickiest, if I can, to less and less and less picky. As long as I keep settings and setups and market conditions which are favorable for a trade, I'm okay. I'm okay to be tolerant and not that picky, but I like to start from the pickiest point and work my way down instead of just take whatever, and then I happen to have better opportunities. I just didn't realize they were there, right? So again, that's my approach. It takes a little bit more time. You do need to end up looking at a few more charts and maybe discard a few more opportunities. But if you have the time to do that, it's great. If not, you can start with more relaxed rules around your trade setups. Okay, for example, instead of rotation in the last 5 days, right? So maybe you are like, okay, rotation in the last 10 days. Okay, and now I may get a longer list. You see that? So you can see, you can be a bit more flexible, and it's fine. I just happen to like to start a bit more in the picky side. Okay. Anyway, I remember GM, Adobe, and Microsoft were the three symbols I had before, so I'm going to start with GM and take a look at the charts and see what we've got. Okay. So when looking at GM, so we can see that we got buyers. Climate is beginning. Okay, we are not too far from the EMA. We need GM to drop a bit so we can catch it. But of course, we also need to look at the 55-minute time frame, which is not giving us the probability we need. We need 50% or more. We're not having that right now. So that would force me into looking and checking at other time frames, such as 89 minutes. Okay, just waiting for chart to load. It's taking a little bit longer than what I would like. 47% with 89, no good. I'm going to try 144. Let's see the 144. And again, I didn't get any feedback from you guys on the chat box. Type something, guys, so I know you are there and all is good. 44% on the 144, so that's not good. 233. So when I'm doing this, I just go through the process. But really, if the 55 is not good and the 89 is not good, probably the 144, 233 is not good. Maybe not even the daily. So really, my bet here is likely going to be the 2-day chart. Okay. So notice how the 233 is 40%. So forget about intraday timeframes. I'm going to check daily. And you know what? I'm surprised here. I was not expecting that one. So the daily time frame provides 47%, and that's indeed very good. Okay, I'm surprised here. I was expecting maybe the 2-day time frame to be the one with 54%, which that is certainly good too. Now, what's the problem? The problem is that my UFO starts at 32, where the EMA is located at 34. So in that sense, we don't have a UFO enveloping the EMA, which is a requirement of our methodology, or at least what I do when I trade, and therefore it's not good. Joe, if you're getting a different measurement than me, it could be for two reasons. Number one, that when you look at the format, you are loading less bars than me. In my case, I'm loading 1,000 bars. So if you're loading less than me, you may get a different number. It may also be that the fact that I use QC and now by heart, I apologize, but I don't remember by heart if you're using QC as a data feed or TradeStation. So that may be another reason why, because different brokers, different data sources will have differences. And then there is a third case. If you look at format, again, back to format, you may have show all sessions enabled or not. And if you click apply, notice my 46% now becomes 42%. So depending on having this checked or not checked will also impact the statistic. Okay, you use TradeStation. Okay, got it, Joe. So that must be the reason for the difference. Okay, in any case, again, for sure, that number is important, is relevant, and having a different number is not ideal. But at the same time, what really matters is that as traders, we have a rule-based approach to trading, and we make sure that it's not like I'm taking a trade because I happen to like GM, and there is a human preference, human decision, and because of that, next thing you know, I want to take GM no matter what, right? So as long as you are acting in a way that is rule-based, even if we have some differences with our metrics, you are doing what you're supposed to do as a trader, which is acting on your methodology when you should. If you're wrong, manage the trade in a way where you lose less or limited and small. And if you are right on the trade, make sure that you profit nicely. Okay, and if you keep doing that, typically an account grows, right? So it's not that critical. You should never be looking at those numbers like, oh my God, I got 10% difference compared to 0.1% difference than Jose, so now I cannot trade today, right? It's not the case at all. Okay, it's not the case at all. Sometimes it may even happen that you may have a bad tick with your internet connection, and that's the reason for the difference. Okay, so let's be perfectionist in a way, but also be pragmatic in another way, where we don't become slaves of market data, because market data is market data, and millions of transactions that happens in the exchanges, and therefore there are differences all the time. So anyway, we got GM. The other one was Microsoft. So I look at Microsoft and let's see what we got there. Wow, that's very impressive. Okay, as a continuation of the interpretation of earnings a few days ago, Microsoft is really moving amazingly strongly. So, with such a move so far away from the average, I would say forget about it. We're not going to be able to catch it. Now, having said that, there are other ways to approach the trade. You've seen me many times. Instead of trying to catch the trade now, we end up selling puts below price, use the credit to buy calls. So again, I'll come back to these opportunities. At this moment in time, ideally, I want to find trades that are a bit closer to the EMA. Maybe there is some UFO there and I can take the trade. Okay, that would be the ideal trade because I'm refining the market timing better if I do that, which implies more patience, which sometimes I don't have when we do the sessions together because we only meet for an hour, and I also need to get some trades executed, and that's indeed a valid way to do it, even though you got less precision and less deltas. Okay, but it's not wrong. Okay, so I like to exploit both ways, even though my favorite approach, as I just said, would obviously catch a trade which is to be caught now. So anyway, GM and Microsoft. Okay, so I'm going to continue with Micron. So let's take a look at Micron. Micron looks interesting, okay, because Micron is giving us a confirmed climate, calls above the puts, very close to the average right now, okay? So all of this is favorable for the trade to work. Now, what's not favorable is the fact that probabilities are 47% on the 55-minute time frame. So let's try the 89. Yeah, Joe, I read your comment there with the drop to 40%. So if you use all sessions and probability drop, that tells you that the institutional interest in that stock, it's only happening during market hours. It's not happening during pre and post market. Okay, so basically you will want to ignore that setting because it puts you in a position where it's not in your favor, right? Anyway, so if I look at the 89-minute time frame, now I got 50%, so now it's good. Problem is that the UFO is happening too low, pointing at $59, where the EMA it's pointing at 61. Okay, so that UFO will not be in the right place. So what if I look at the 144? Can we spot another pile of orders in a different place that allow us to time a trade? Not in this time frame. What about 233? Okay, 233 doesn't have it. So we're gonna go back to the daily time frame. The daily time frame we're at 53%, but no UFO around. So what about the 2-day time frame? Yes, no, not that one. I got excited for a moment because I thought I read 61.43, but it's 60.43, where the EMA it's more into the 61, isn't it? So what's the EMA price? 61.04. So yeah, I mean, can you take it? Yes. I'd be okay to be flexible and take this trade, and that's only because it's a stock. If it was futures or forex, I would not do it. But with stocks, I would do it because we know stocks are fragile. They depend on different components such as the sector, etc., etc. So, not being like millimetrically precise, it's something I'm okay with. Even though the more precise we are, the better. But I'm okay not to be that precise. If I need this trade and I don't find anything better, I'd be okay to plan on this trade. Okay, so we may come back to MU, to Micron, if I don't find anything better, but hopefully we will find something better. So let's try. So Adobe. Let's take a look at Adobe. This is a fairly pricey stock with $400 per share. Let's take a look at Adobe. Beginning part of the climate, the blue above the gray. All of this is ideal. We are a bit far from the EMA, which is located at 392. So that's not so ideal, but let's find out if we find a good setup. On the 55-minute time frame, we got a 55% probability. That's beautiful. 387 happens to be below 392, so that UFO would not be acceptable for the trade. What if I look at the 89-minute time frame? Let's take a look. We got 46%. That's not good. What if we look at the 144-minute time frame? 44. What if we look at 233? Let's see. We got 55%, but the UFO is located at 381, so that would not work. So then we need to check daily and today. So daily has no UFO, and today has a UFO located at 394 and a probability of 63%. So my friends, this is the trade we are going to be planning now. Of course, we need Adobe, which is currently trading at 401, to come back down to this price point. Okay, so certainly I like this one better than Micron, even though I had not a major problem with Micron, but I like this one better because it's a higher price point stock, and in that sense, it's going to make your options trading more efficient. You're going to get more premiums. You're going to get a greater exposure to market movement because it's a higher price stock. So I would prefer this one, even though for practice purposes with real capital, if your account is small, this one may be a challenge. So, we may look at both, at Micron and Adobe. But in any case, ideally, I would have the stock to be inside the UFO. So I'm going to continue looking. What about Costco? So with Costco, we have the same market setup with the climate, confirm with the blue above the gray. All of this is great. Now we have on the 55-minute time frame 56% probability, and we have a UFO located there at 526, 516, which is indeed enveloping 521. So Costco is also a valid candidate, and I would say even probably better than Adobe, given the fact that 530 is only $4 away from 526, and obviously 500 stock could move $4 in 4 seconds, right? So it could happen very quickly. So we may get a feel today. Okay, it may just come back down a little bit, and now we are in the trade. Okay, so coming back to this in a moment. Costco, my favorite. DHR. Let's take a look at DHR. So with DHR, we seem to be very far away from the average. So that one, I'll leave it alone. And also probably not the most liquid in the world. And the last one here is Lulu. So let's take a look at Lulu. And if not, we're going to go back to Costco. Okay, so what's happening with Lulu? We have the climate that we want. We have the blue above the gray. All of this is good. We have a UFO located at 293, but the probability is not good enough. So the 55-minute time frame is not good. What about the 89-minute time frame? So loading, we got 55%, 51% probability. That's good. Now the UFO is located at 291. That is too low. We need 295 or above. So we're going to look at the 144-minute time frame. And there we got another UFO with 51% probability, but also 291. So then the last one for intraday time frames is going to be the 233. %, and also 291. Okay, so yeah, unfortunately, we got nothing on the intraday time frames lining up with the 295. So what about the daily time frame? The daily time frame got 280. What about the 2-day time frame? No UFO on the 2-day time frame, the 3-day time frame either. Okay, so this one unfortunately will not work. So summary: I am happy to explore a trade with Costco That was the setup I liked the most. At the same time, $500 per share may not be ideal for everybody because it may make the trade to be fairly risky. So I'm going to look at Costco, and I will also look at MU and explore what are my possibilities when it comes to entering this trade and how we can position ourselves. Okay, we should have time to plan those two guys. Now, the first thing to kind of like define when it comes to Costco would be, where do we expect the target to be? Okay, and one very powerful way to answer this question is to use the speed bumps and plot the speed bumps out of the next identify pivot, and that will give us a target of around 548. Okay, so 548 will be our target. Of course, I want to also see if there are UFOs anywhere. Actually, we have a UFO at 548, 547.75. So everything seems to make a lot of sense for the target to be located here. So I'm going to right click, okay, to send to the strategy builder and plan on a trade here. Okay, so, and I'll come back to this in a moment. Let me float it. So here is a trade plan on the strategy builder. Second thing I want to do in parallel, I want to find out more about the earnings date. How come it doesn't show? Is it that much on the left? Okay, here. So earnings date is located all the way in September 22. Here, September 22. So again, if I was to do a manual plan of the trade, certainly using September 22 could be a good idea in case the stock is not really moving our way and we want to give the stock a chance to come back to us. And on top of that, as we are losing time decay, we want to expose ourselves to a potential increase on implied volatility as earnings are approaching further down the line, but that's all the way in September. So it's kind of like 3 months from now, isn't it? So, I mean, certainly something smart to do, but I just feel it's a little bit far. And the reason why I'm saying that is because I'm thinking the stock is $500. If I use a further expiration date, the further it is, the higher the price. So we may make this trade fairly pricey. Okay. Notice how the strategy builder calculated that to reach our target, we are good with August. Okay, we are good with August, but because August 11 is the selected date, the strategy builder is also selecting the next monthly expiration date, which is September 16. So everything is pointing at September as the right expiration date for us to use, but I got an issue. And the issue I have is that September 16 is happening prior to earnings, being earnings on the 22nd of September. So that increase on implied volatility I just mentioned would affect the expiration date after September 16, but will not necessarily affect the September 16 expiration date, which happens to be the third Friday of the month in September. So I'm a little bit turned off by that because I could not take advantage of this opportunity the way I would like, based on that benefit of an increasing implied volatility into earnings. Okay, so then I'm gonna have to approach the trade a bit differently to try to create a scenario that gives me an edge instead of suffering the consequences of time decay. And that's it. Okay, so I'm gonna do that in a moment. I need to take a sip of water. Thanks for that. So how are we going to do this? Okay, so again, the beauty of this trade with Costco, the one thing I liked is the fact that we are fairly close to this UFO. And because we are fairly close, so my intention is, ideally, we would plan on a trade using the strategy builder, right? But you will not execute the trade until price come inside the UFO, and now you execute the trade, and now you get the move. My problem is that if I'm going to do this, while it's totally fine, if the stock doesn't move efficiently towards my target, now I'm going to start getting into a problematic situation with the time decay. Good news is that this trade has pretty low IV. I didn't mention it, but I was watching it. So we are talking about 26%. So again, if we look at implied volatility range, we are down here. And because we are pretty low in volatility, so odds are volatility will rise no matter what. So again, this trading is not crazy. Doing what the strategy builder suggests actually makes sense. But again, it's not the optimal trade I would love to be able to put together, given again the fact that earnings are happening on the 22nd of September, which is after September 16th. So what can I do? Well, option one, forget about earnings and just go with the trade based on the strategy builder. One thing you could do if you have a limited size account and maybe your maximum you can risk is, let's say, $300, maybe you can filter the trade. We may not get an option if you do the update. Actually, yes, there are a few choices to be able to do this trade with $300 of risk maximum. Out of curiosity, what delta we get? Very little delta. Okay, the difference between 0.54 to 0.50 is very little delta. So the performance of the trade is going to be, 20% is not that bad, but it's not that amazing either, right? So we've seen options trades which are much better than that. So you could certainly do a bull call spread, buying the 530 and selling the 535. And if you get to the target being 547, so you will be in a position where the most you have at risk is $260 to $265, as you can see on the upper right. And if you're right on the trade, so then you're going to make 19.4% of that. Okay? So you're going to make $51. So again, in a $500 stock to make $51 of profit, to me seems a little bit like a waste of time. And the problem is that, I type a number here, which is a very small risk given the price of the stock. So I'm not into it. Okay, I'm not into it because I got the disadvantage of the earnings report, and then because it's a higher price point stock, I cannot approach it efficiently this way unless I'm willing to risk more. So if you're willing to risk more, and given the fact that we have the disadvantage of the earnings report to happen after the expiration date, so what I would prefer to do is the type of trade that we have done before, where I would be positioning myself with a couple of bull put spreads, where I would sell a put and I would buy a put twice. I would have two of the bull put spreads and use that to buy some calls. But the problem of doing that is that if you do this with a very low volatility environment, probably the amount of money you're going to get from those puts, the credit you're going to get, is very limited. So you need to buy calls that are very far away, and therefore your net delta is also going to be very small. So I'm not too happy with Costco to do this application. Okay. So what's my next choice? Well, then my next choice would be to either look. Remember, we talked about Adobe. That could be another good candidate, but also we're going to be running into a similar situation because it's a $400 stock. So we're going to run into a similar situation. So therefore, I'm going to move with the intention of giving you a trade which is as directional as possible with the greatest delta as possible. I'm going to move into Micron because with a lower price point, I may be able to increase the value of risk in the strategy builder, and in exchange for that, get more deltas, and that may make it more useful. So I'm going to give that a try first, and then, depending on what we find and the time that we use, I may go back to either Adobe or Costco and work on those trades from a different angle, but also work on the scanning here on the top with a different parameter as well, as you will see later, to try to make this better and save myself a little bit of time, okay? But anyway, back to Micron. So with Micron, I believe we were relying on the 2-day time frame, okay? So here's the 2-day time frame. That UFO with 62% probability was lining up beautifully with this one. So with the EMA, so if we're looking for a target here and we project above this high a target, so we'd be dealing with 65.26 as a target. We have a UFO there located at 68. So I would say there is room to go a little higher than 65. 68 is way higher than this. So I will not be that optimistic. Let's take a look at the daily time frame. We have a UFO also very high at 67.76, which is above the speed bump. So look, I feel that those decisions would be a bit too optimistic. So I'm just gonna stick with my $65.26 target for that particular trade. Okay, so that's gonna be my target. So we are trying to make a profit out of reaching 65.26. So the first thing I want to do is send that to the strategy builder. 65.29. I mean, 3 cents different. I guess is good enough. You can always, by the way, adjust it. You can come in here where it says 65.29 and you can type 26. Hit enter or click on go, I should say. And the moment you do that, everything recalculates. So if I was to come in here and say, okay, let's say I want to reach $300, just to use the same as we did before, click update. Okay, so now if I, sort these out, so now we are talking about August 15 as a target date, which is similar compared to the prior case. I'm still making 50 something dollars and risking less than 300. Okay, so you would say that's quite similar. Okay, actually the risk is less, is 192. So it's not similar, it's better. But also, so you are making $59 with a $60 stock instead of making $59 with a $500 stock. And that means what? Well, that means that you got more deltas. Notice the difference. 50 minus 28 is a greater difference compared to what we had before, that I think it was 55 minus 50. It was only 5 delta. So, which was the only way to get the risk down to 300 or less. So with Micron, we could certainly do something of that sort. Okay. Now, if you are concerned, okay, let's say you're looking at Micron, again, when looking at the implied volatility, is very low. Okay, it's very low. I mean, the VIX is low, so most of the stocks are low. Okay. So, but now, if you are concerned about what's going to happen if it doesn't get to my target on time, and now I'm losing time decay and things of that sort. So you could certainly, looking at the rates of return earlier, really from 31% to 27%, I would say it's not like there is that much of a difference. So you could go ahead and do a bull put spread. And then now you are collecting time decay. And if that stock is moving against you, then you could consider going ahead and butterflying it, and again converting the trade from directional to non-directional, and now getting more credit and giving the trade a second chance. So that could be something smart, because the earnings date with Micron. Let me put that on the screen. Here we go. The earnings date with Micron is a very similar situation as before, where earnings are 927, and therefore, again, we are back to a similar situation as before, and time decay could be a problem. We cannot use earnings as a way to offset a little bit of the time decay by having the implied volatility rise into that, because our September 16 expires before, so we won't be able to benefit from that. So then making it a bull put spread, now you are guaranteed to collect time decay every day, because that's a credit trade. So this would be a valid way to approach it. Now, of course, the profit to be made is less, would be $36, okay? But also the risk of the trade is 137, which 137 is less than 187. So, maybe you do a couple of those. If you want to reach 300, you do a couple of those, and then you're going to make 60 something. And again, that's a valid choice, okay? So option number one is to do that. So I'm going to go ahead and right-click on the bull put spread and create a risk graph and put it here. Now, what's the other benefit of doing the bull put spread? Well, the other benefit is that because it's a credit trade, it doesn't matter if we reach the target or not, as long as we are trading above 62.5, to be precise, above 61.34. That's the break-even point. As long as we are above 61.34 on expiration, we are breaking even or we are making a profit. So we, in other words, because of that, I can afford to take this trade, okay? Even if I'm not inside the UFO. If it's, that's the other reason why I'm pointing at this choice with the bull put spread. If it was a bull call spread, because it's a debit strategy, which I will prefer given the fact that implied volatility is low, but because I'm not inside the UFO, if that market goes against me, not only I'm losing money because the market is going against me, I'm also losing money on time decay. So it's paying in multiple ways. So again, given the fact that I'm not inside the UFO, okay, let me go back to the chart so you see it. Not like that. Sorry for that. I just clicked on the wrong keyboard key combination. Here we go. Here we go. So because we are not inside the UFO that we are relying on, doing the credit trade is basically telling the system, look, I just need to be above 61 something. And as long as I'm above 61 something before on September 16, I'm going to be in a profit. It's a credit. Okay, where my expectation is actually to go to 65.26, okay, which was here. And if we get to 65.26, then I'll close the trade for a profit. So certainly valid approach. Okay, it's offsetting that problem and it's making sense to me. Guys, you've been silent for a while on the chat box. Could you please confirm if this makes sense to you as well or not? That would be great to hear. Now, the other thing I would like to explore with you guys here with the strategy builder is the fact that we can also work on building those trades being, apart from at the money, which is what I've done now, we can build those trades to be out of the money or way out of the money. So what's the difference if we do that? Well, that's going to change the break-even point, which may make it even better, especially given the fact that we are not inside the UFO. If we were inside the UFO, again, the bull call spread would be the favorite choice. But what if we do the out of the money? If I click update, okay, with the same target and everything else, so now we are building another collection of trades, okay, which I'm gonna, again, it's still risking maximum 300. I'm gonna sort based on return on investment. And now again, we got a bull put spread, 62 and 65. Okay, 62 and 65, which the difference here is that if I right click and risk graph it, notice how this one got a break-even point of 63. Okay, 63, which is higher. Okay, which is higher. So that makes my bet to be much more directional, which if I was inside the UFO, I'd be very happy to get more directional, more more deltas. The difference is not too much. The prior trade, which is a bit less directional, got delta of 10. This trade got a delta of 11. So it's not like too much of a difference. But while it's not too much of a difference because the distance between strikes is still the same, $2.5, the break-even point now becomes 63, which is halfway between the entry of the UFO and the target located at 65.26. So that makes me more directional versus having a break-even point located at 61.3, which is 61.3 is kind of like where the UFO is, right? So the UFO is 60.43. I mean, it's a little above the UFO, but it's very near close to the UFO. So far, given the fact that we are outside the UFO, the strategy that is utilizing the at the money options will be the one that makes the most sense. And you can also build it to be way out of the money. Okay. And if you were to do that, and we do the same exercise, and we sort it. So now we got the bull put spread providing the greatest performance. Okay. But now it would be interesting to see what's going to happen when we look at the risk graph when it comes to the break-even point, which the break-even point now is about the same. Okay. And it's about the same because actually it's the same trade. It's 60 and 62 and a half. Okay. So given the fact that the strike price increments are $2.50 in this case, so the system, the strategy builder, ended up picking the same strikes. If we had done this with a stock that has strike price increments of $1 at a time, so we would have had very similar but slightly different setups, and then we can talk about it. In this case, it's exactly the same, so we have the same break-even point. So long story short, no matter how we look at it, this seems to be the best approach for this particular trade, given the fact that we are outside the UFO. Okay, so with no wasted time, I'm just going to take the trade, and then I want to show you something else before we conclude the session. So let's take a look at Micron. Okay, so Micron, MU, and we are looking at September 16, and we are looking at selling the 62.5 and buying the 60 put. I believe that was the trade. Let me reconfirm that. So selling the 62.5 and buying the 60. Yes, that's the trade. And I'm just going to do it. And of course, I want to document it as well so we can track it in future sessions. So I'll float this. I want to add my lines on the chart so we know when we do the trade, it was right here. Okay, so that's when we do the trade, shooting for the target at 65.26 up here. Let me bring TOS back to force the trade so I gain time. Please don't ever do this. I'm going to convert this to a market order. That's not how you do it, but I just do it so I can push the trade in, so I can document it, so we can review it in future sessions. Just got filled at 110. So 110 means that I got 395 to 85. Let me document this so I can show you the other possibility I mentioned I would. So the 60 is 2.85 and the 65 is 3.95. So this is 110. Okay, so if right, this trade will make $110. So we're gonna copy the position to the clipboard and then back to top to the positions panel, and we're gonna add it here. Okay, that's it. I got it. Now, what's the other thing I wanted to show you, which again with the VIX being low, will make it difficult to find the right positions. But again, the other thing I wanted to do, as I said before, is we could, with certain stocks, we could exploit a setup where we sell two of the bull put spreads. Okay, so sell a put and buy a put below. We can buy two, and then in exchange we can go ahead and take that credit and buy calls above, or even do bull call spreads by buy a call and sell a call above, or even butterflies by selling two calls and buying one call above, right? And so again, the more units you add to the call side, the cheaper you make it, and therefore with the credit you get from the below, you can do better with that and hopefully end up with a decent delta. But in the end, if you think about it, no matter if you use only one call, or you do the call spread, or you do the call butterfly combined with the bull put, no matter how you approach it, the more credit you get on the bottom part, the better. Okay, because that will help you to pay for the calls. And many times also when you look at the skew, okay, while the classical skew will be a volatility smile, it happens often that there is a skew where implied volatility on the put goes higher and implied volatility for the calls goes less high. So there is like a smile but going sideways instead of a symmetrical smile. So in other words, if I get more premium from the puts, I can buy calls that are closer because the implied volatility doesn't go up until much further out. Okay, and that would help me to build positions that are more efficient. But for that, I need high volatility, not low volatility. So something I love to explore, which again today is a tough day for that, it's to combine to this type of scanning I done, add a scanning for high implied volatility, CIV mean greater than 80, okay, which in this case gives me 0, or CIV mean minus historic volatility above to standard deviation, which probably gives me 0. It gives me Costco, okay, and therefore with Costco, and I'm running out of time, but with Costco, I could explore that, okay, because while implied volatility on the range looks low, if you look at the probability cone, it's probably going to be less low than other stocks. So notice that, it's not inside all the blues, at least based on the short-term moves of Costco, implied volatility is a little higher. So again, if you look for that, or also on the metrics, you look for, apart from implied volatility minus historic greater than 2 standard deviations, you look at the greatest increase on the CIV mean in the last 5 days. So, well, MU was not a good candidate, as we said. What about Lulu? Was Lulu a good candidate? So, no, it's not. None of those are. The red line is all the way inside all the blue lines. So it seems that Costco was the best. But again, if you combine this options analysis with this research with the matrix, with maybe softening a little bit of the rules of other parameters that you have, okay? Maybe instead of looking for groups that rotated, you look for groups that are already up, no matter how many days. So now you may end up with a longer list, which was not the case, but you will sometimes end up with longer lists. You see that? Not like that. Again, as I said, today is a tough day with the VIX solo, right? But hopefully you got my point. And with this type of combinations, let me check again above the standard deviation. Costco shows up again with a strong up. So again, with this type of combinations, sometimes you may end up with a little bit of a longer list. Again, today is a tough day. But now, so you go to Costco, which we said was the most favorable. And I guess this is going to be homework for you guys, because the session is technically over. But basically, you look for the setup. This is the setup we were looking at earlier. And here now, you will be looking at selling puts and buying puts. And in exchange for those put spreads, you could either buy calls or call spreads or call butterflies above price, and end up with a positive delta trade that has limited risk, which is the distance between the puts, okay? Times 2, because it will be 2 put spreads, okay? Anyway, while I was not able to find one of those trades on Costco, at least we got the one with MU. And hopefully what I said about Costco is understood. So in the following days, you can do your analysis yourself and hopefully find some trades. Again, today, after the Fed day yesterday, market going up, all of that. So volatility is a bit on the dry side. And I guess, yeah, the market keeps going higher. So that's what's happening. So if the market corrects a little bit in the following one day or two, so just a little bit of a drop may give you now opportunities to do what I'm saying. That would be, potentially very powerful. Okay. So anyway, Ahmed, Jose, I will go with the first approach for 62.5, 67.5 with a delta of 21. Was it 21 or was it 11? I believe it was 11, Ahmed. You are widening the spread from 62.5 to 67.5, which indeed that would give you a delta of 21. I get you. But what about your break-even point, Ahmed? Because I believe your break-even point will probably be a bit higher now. Okay, so a bit closer to your target. By the way, nothing wrong with that. That means, yeah, you are more directional. My point was simply that I would be okay to be more directional based on my rules if I was inside the UFO. But because I'm not inside the UFO, then I will want my break-even point to be a bit lower. Okay? Oh, the call spread. My God, I was just looking at the strikes without noticing you wrote C for call. Thanks for that, Ahmed. I got you. I get you totally. And again, my comment would be the same. Because it's a debit strategy, I would rather wait for price to come inside the UFO and then get in. Okay? Got you. Wonderful. Everybody, it's been my pleasure to spend an hour with you. As always, it's always a joy to share our passion here all together, isn't it? So thanks for joining me as well. And I will see you in the next one. Keep up the good work. Any question, you know the question page. You know my email as well. So don't be a stranger. See you soon, my friends. Take care, everybody. Bye-bye.